This is Alpha Dominion Forex Traders. Today we are taking a long recording of events to show in a month how much we should be able to make when we have an account of $1,000. An account of $1,000. Tony, let's see how much $1,000 is going to give us in a month. $1,000. And I'm on GBP JPY, pound JPY, that is pounds Japanese yen. Pounds Japanese yen is what I am working on right now. So in the month of March, starting from the 1st of March to the end of March, I want to see how much $1,000 will be able to generate for us using this strategy of Bollinger Band, and at the same time adding Ichimoku. Bollinger Band, like I told you, 15 minutes Bollinger Band, like I told you, has to do with 3 lines. We have 3 major lines: the upper line, the middle line, and the lower line. The upper line, the middle line, and the lower line. Ichimoku also has to do with 4, 5 to 6 different colors, but for the purpose of this exercise, I'll reduce my colors to 2. So we are starting from the 1st of March. This is the 1st of March. And when you look at the 1st of March, I say when we have a contraction, when we have the contraction of the Bollinger Band, which is 15 minutes Bollinger Band, the upper and the lower Bollinger Band contracts. And this contraction is, this is one, this is another, and once it breaks the median, then we take a trade. And you can see this trade is up, so we are taking a trade down. We are going to take a short, and this short we are taking will stop here where the Bollinger Band ends. And when you look at the pips, this is 598 pips, which is, we call 59 pips for a start on the 1st of March to the 2nd of March. So if we are going to turn we want to see what $1,000 is going to give us in the month of March, following strictly the Bollinger Band principle. The Bollinger Band principle is telling us that when there's a contraction up, we sell, and when there's a contraction down, we buy. We buy from down, then we sell from up. We buy from down and we sell from up. That is what it says. We buy from down and we sell from up. Okay, so now we have, for a start on the 1st, we have here 564 pips, and 564 pips on a $1,000 account. If we are to take a lot on this $1,000 account, assuming we are going to use 25% of that account is what we are going to expose it to the market for a start. So for every $1,000, we're going to be exposing 25 cents in the market. It is compulsory that for every 0.25 cents, which is the lot we are going to put in the market, we must put a stop loss so that we guide against our capital. Guiding against our capital is key. So let's look at why we want to add Ichimoku. Ichimoku, like I say, has 1, 2, 3, 4, 5 different lines. You have the Tekken-sen, you have the Kijun-sen, you have the Chikou-span, you have the up Kumu and the down Kumu. I'm only interested in the up Kumu and the down Kumu, so I make this one maximum. When I click on this, this is what you see. You are seeing red. Why did I add Ichimoku to the Bollinger Band? I'm adding the Ichimoku to the Bollinger Band to let me know exactly if the market is selling or is buying. Where you see red is sell, and where you see green is buy. So when you look at this, the moment I'm seeing red here, it's telling me at this puncture that I'm supposed to be taking a sell. When I'm seeing green here, it's telling me at this portion I'm supposed to be buying. But there is green, red, green, red. What the Bollinger Band asks me to do is it gives me the opportunity of the contraction. It now contracts up. The two of them will contract up. When it contracts and breaks either the green or the red, I know I'm taking a short. Once it's breaking the green, I'm taking a short from up, and once it's breaking the red from down, I am taking a buy, which is long from down. So Ichimoku combination with the 15 minutes Bollinger Band only help me to ensure that I'm in the right market at every point in time. So when you see the Ichimoku breaking the middle of the red and at the same time breaking the middle of the green, it's telling you that you are supposed to be in this market for sell, and once it is green, you are supposed to be in this market for buy. So you see, I'm only interested in using the up Kumo, which is green, and the down Kumo, which is red. Now let me come back to the 1st of March. So you could see the red here. I'm taking this trade now. Let me increase it a bit so that we'll be on the same page. Now I'm taking this red. I'm taking a short. So 596 times 0.25, 596 times 0.25, that gives me 149. Then their spread is about 75%, then that will be 111. So on my 0.5, I have made 111 on the first trade I'm taking on the 1st of March, $111 on an account of $1,000. So I am not going to trade. I will not be able to trade every day because I'm waiting for the confirmation from the 15 minutes Bollinger Band, which will either contract up or contract down. So it is key that this strategy, you must exercise some patience. You must exercise some patience and wait and watch the market tells you either to buy or to sell. Okay, on the first, I've been able to make $111. Then on the second, the market did not really give me what I want, because you could see the market is having what we call ranging. Ranging is a straight parallel up and down, where the market is forming a straight line. So in this straight line, what I'm waiting for is for the market to either break out up or break out down. Good. So this is ranging. It comes up here, it goes down. It came down there, it comes up here, down here, up here, down here, up. So on the 3rd, on the 4th, on the 5th, on the 6th, I'm unable to take a trade because my Bollinger Band has not given me a breakout from this ranging position. So on the 7th, there is a breakout eventually. There is now a concentration of the Bollinger Band up and the Bollinger Band down. Then at this median, there's a breakage. So this is what I'm waiting for. Then the second confirmation is Ichimoku. Ichimoku is showing me red down. It means if I'm taking a short here, I'm going to be in the right market. So when I take this short, you will see this is a good market for me on the 7th. On the 7th of March, I'm taking a short again, and I'm having 1651. 1651, which we can call 161 times 0.25. It gives me 412, then times 0.75, which is the deduction, the leverage, and everything by the brokers and their commission. So I'll be making 309. 309 plus 11, 111, it gives me 420. So I'm making 420 starting from the 1st of March to the 7th of March. From the 1st of March to the 7th of March. So I have taken a trade here, and I'm making 420. Then again, I look at on the 8th. The market is not disposed to me taking a trade. So on the 9th, I look at on the 9th, yes, I'm going to take a trade on the 9th because a parallel has been formed. There's a concentration. There's a concentration of the upper line and the middle line together. Once this concentration is given, then I can take a trade. Now, this is it. And once this is given, I just change the color so that I can see what I'm doing. Once this is given and it breaks the median, once it's breaking the median, then we now confirm with Ichimoku, because Ichimoku gives you a cloud for the future, that I'm going to be green. I'm going to be green in the next 2-3 hours. So I'm seeing green here, then I'm taking a buy, or I'm taking a long. Then I take a buy from here. On the 9th of March, I'm taking a buy, and what it gives me here is 2504. 2504. Remember, I'm only exposing 0.25, which is 25% of the $1,000, so that I can save $750 in the market, in my capital. And I remember, each of these trades I'm taking, let's look at the opportunity is giving us, so that we maintain certain level of sanity. If I'm taking a trade here, I am putting my stop loss. My stop loss must be 20 to 30 pips. So I am putting my stop loss below. Never take any trade without a stop loss. Never. Listen to me again. Never take any of this trade without a stop loss. So I'm putting a stop loss here. Then I move up. This gives me 2474. 2474 times 0.25 times 0.25, it gives me 618. Then we take all these, their leverages, 0.75% out of that. That is 463. We already have 420. 463 plus 420, this gives us 883. We now have 883 trading from on the 883.87. I will just call it 884. Trading from on the 1st of March to the 10th of March. While I have taken this trade again, I am looking at the opportunity of the breaking of the middle Bollinger Band of 15. Once there is an opportunity, this breaking, and I'm seeing red on, you can see this red. I'm seeing this red Bollinger Band. It's telling me that there is a sell here. So I come here, I look at this median, it breaks here, then I'm taking a shot from here. While I'm taking a shot of it, I'm putting a stop loss. A stop loss of about 26 pips. Okay, that's all right. This is my stop loss. Then I takes it down. So from here to on the 13th, from 12th to on the 13th, 2 days, I'm having 32864. 32864. What inspired me to take this trade is Ichimoku, because you could see how big this red is. Why this breaking is taking place is showing me red. So because I'm seeing this red here, I have to take a short here, put a stop loss, then I'm taking 3299, or we just call it 329, 3299. Then I come back again to calculate 3299 times 0.25. That gives me 824. Then we remove the commission, the spread, and everything. Then times 0.75. That gives me 618 plus 884, 884. I've attained the mark of 1,500. Now that I have 1,500 plus my capital, which is 1,000, that means I have 2,500. For every 1,000, I take a trade of 0.25. So my next trade is going to be 0.25 in two places. That is 0.50. But I'm not going to put 0.50 straight. I'm going to spread it to 0.25 in two places. So I now have 1,502 trading from on the 1st of March to on the 13th of March. Now on the 13th of March, I have taken this trade again. When I look closely, you can see at the upper level here, this Ichimoku is showing me green. Though there is no concentration between the Bollinger Band, so I'm looking at the median. Once the median is here, is breaking the median, and the green is also showing, is also a confirmation that this trade is going to be positive. So I'm going to, the moment it breaks this middle, this is what I'm waiting for. You must wait for it to break this median. And once it's breaking this median, it's breaking the red. Once it breaks here, I'm picking my trade here and I'll put a stop loss. A stop loss of about 25 to 30 pips. So about 25 to 30 pips. That is what I am preparing to lose. I can lose 25% of my capital to gain 50% of the profit. So that is what I'm preparing to lose. I am preparing to lose 0.25 of these to gain how much? Let me see. So I take a trade like this. I take this trade. This is a buy because I'm seeing green. This green encouraged me to take this trade. Then the breaking of the median of the 15 and the red is a confirmation that this trade is going up. So I take this trade. What I'm actually doing is hypothetical and it repeats itself. So anywhere you find this situation in any of this market, you take your position and be very careful so that you'll be able to make money out of it. So let's see. This one is giving me 2558. It's giving to me 2558. Good. So 2558. This is the first time I'm going to use 2 0.25 in two places. 2558 times 0.25, which is 639 times 2, which is 1,279. Then I remove the commission and the leverage of the broker. So I've gotten $959. We call it dollars or dolls. $955 plus the 1,502 I've attained from the 1st to the 12th of March. So what I have now is 2,461, and I have 2,461. What I'm doing here in Alpha Dominion Forex trading is moving $1,000 in a month to a certain amount of money, following what Boliga Band is giving to us and Ichimoku, the opportunity they presented in 1 month. For me to continue to show you how to trade, make money in Forex, I want you to also encourage me by subscribing to my channel and then make a comment. Subscribe, like, and make a comment. Make a comment on what you want me to do, which other areas you want me to inform you. I started with giving you Boliga Band alone. Boliga Band alone. If you look at all my postings, it's Boliga Bands alone. But today, I'm adding Ichimoku as another level of confirmation of what you get, so that you now have a confirmation tool. Apart from the breaking of the median, you also have a confirmation tool which is either red or green. When you see green, we are talking about buy. When you see red, we are talking about sell. So, and these are the two areas I looked at. Then the breaking of the middle to determine where I'm taking a trade. Now I have 2,461, and we are on the 13th of March. On the 13th of March to the 15th of March. Again, good. There's a concentration of the Boliga Band up here. When there's a concentration of Boliga Band, the upper Boliga Band is making a parallel and the lower Boliga Band is making a parallel. This is number 1, this is number 2. Then the trade is breaking the middle. You could see it's breaking the green. This is very key. Once it's breaking the green up and you are seeing the red, see how huge it is. It's telling you this is sell. So you prepare to take a trade from here. We are taking this trade from here now to this point. You could see this red. This red is telling us, because the red is being shown ahead of whatever is going to happen. So when you are seeing the red and you are seeing the breaking of the median and the middle on top, and it's breaking the green on top, it tells you this is where you are going to place your trade to buy. So when we are buying here from, remember we are now using 0.25 in two places. That gives us 2,461. So we are now having here 4,803. 4,803. This is huge. Oh, let's see how much this is going to give us. 4,803. No wonder the cloud here is very heavy. Times 4,803 times 4,803 times 0.25. Remember 0.25 in two places, times 2. Then let's remove the leverage, the spread, and the commission, times 0.75. So here we have 1,801. 1,801 plus what we have, our profit is 2,461. 2,461 This is now 4,262. 4,262 plus our original 1,000. We're now having 5,262 on the 16th of March. We've been able to turn $1,000 to 5,262. Our profit is actually 4,262 plus our original 1,000, and that is going to give to us now 5,262. We now have 5,262. That is it. So it also means that I'm increasing my lot. Again, when I look at on the 16th, the Bollinger Band, there's a concentration here, good. There's a concentration here. What is also going to, there's a parallel line from the upper Bollinger Band, and there is also a parallel line outside here of the Bollinger Band. But what actually is encouraging me here is this this Ichimoku. The green is so huge, saying that I'm about to go up. So once it breaks this median, and I'm going to put my stop loss here. My stop loss should be 25 to 30 pips. 25 to 30 pips. 25 to 30 pips stop loss. I put a stop loss below. Like I said, never take a trade without a stop loss. Never take a trade without a stop loss, because you must at all times protect your capital. It is better you lose 25 pips than to lose 80 pips of your capital, because you can recover it easily. Now let's look at how much is this. This is 2197. 2197. 2197 pips times 0.25. You know we have 5,000 now, so we are going to times it by 5. That is 137. No, let me start again. Let me go over this again. What we have here is 2156. Okay, 2156 times 0.25. That is 539 times 5. That is 2,697 times 0.75. Removing the leverage, removing the commission and the spread. So we have $2,000. $2,000 plus 5,000. 5,262. 262. It gives us 7,000. We now have 7,283. Remember that we're able to get to this stage because we stick strictly to the opportunity given to us by Ichimoku, which is green and red, and the Bollinger Band, which contrasts up and down. Then on the 17th of March, you also see a Bollinger Band contracting up. This is beautiful. This is a very good market. The Bollinger Band contracts here, number one. The lower Bollinger Band contrasts at the up, and the upper Bollinger Band contrasts on top. Then we are having the median. Not only having the median, the market price breaks the green, and you are seeing a heavy red. So this red can also encourage you to be in the market for the right reason. The right reason is that you must make profit at all costs. So you take this trade here, then you put your stop loss, and this is what you get. Then how much is this? How many pips? 2776. On the 20th, we're having 2776. On the 30th, we're having 2776. 2776 times 0.25. You know we now have 7,000, and each 1,000 is 0.25, and we're going to times it by 7 times 7. That is $4,855. We remove delivery, the commission, and everything. Then we have 3,643 plus 7,283. 7,283. This is huge. We've turned $1,000 to how much now? $10,925 between the 1st of March to the 20th of March. We've been able to turn $1,000 to $10,925 within the month, within the days of from 1st of March to the 20th of March. And again, we are looking at the breaking, and the breaking here is also giving us the opportunity. Look at the green. The moment you are seeing the green, is telling you this is a buy. And the moment the Chiboku is being broken by the middle lower in red, then it is also breaking the median, which is the Bollinger Band. Then we can take this trade comfortably. Once here is broken, we can take this trade. It's broken close above it. It came to retest. Then we're putting our trade here. When you put your trade here on this retest, this is what you get from here. Remember, every trade you take must have what? A stop loss. This is my stop loss. My stop loss is, let's measure it, 24 pips. Great. So I'm ready to lose 24 pips in this market to gain how many? 286 pips. So I have here 2892. 2892 is what I have here. 2892 times 0.25. Remember, my account is now $10,000. So times 10. When I times it by 10, it's giving me 7,230. Each $1,000, we are exposing 0.25 cents. Now I'm in $10,000 and I'm making 7,230. Then I remove the commission, the leverage, and the spread of the broker. When you do that, it comes to 5,422 plus 10,000. And I have $10,925. Oh, this is great. So I'm in 16,000 right now. 16,000. I'm now in 16,347. $16,347 is what I have now. And I've been able to turn my $1,000 to 60,347 from the 1st of March to the 22nd of March. That is great. From the 1st to 22nd of March. Then on the 22nd of March, there's also a contraction. You have the contraction here. It has breaking the middle. It's breaking the median of the 15 Bollinger Band. It's crossing the green. You are seeing the heavy red. This is a sell. This is a sell without a doubt. So we are taking this sell for how many days? We are taking this sell from the 22nd to the 24th. That's 3 days. Then it's giving us 4189. 4189. Just look at my drawing. This is very capable. 4189. 4189 times 0.25. Just look at how I'm doing it meticulously. It gives me 1047. Remember, I now have 16,347. Then times 16. Times 16. It gives me 16,000. Then less the leverage, the spread, and the commission. So what I have is 12,567 plus 16,347 plus 16,347. So as at today, on the 24th of March, I have turned my $1,000 to $28,914. This is huge. This is huge. What we are doing here simply is to follow the rule of Bollinger Band. We follow the rule of Bollinger Band. What are the rules? One, there is a contraction up, number one, and there is a breaking of the middle of the Bollinger Band of 15, number two. Then there is a green, Ichimoku green, being broken by the price. Then number three, is that number three or number four? Number four, you are seeing the red. You are seeing the red, then you are taking a trade. It means the moment you are seeing the red on your right, you are taking a trade. You are taking a short. It's either you sell, you call it, it's either you sell, you short. When you are selling, we also call it shorting. So it's either you short that trade or you sell that trade. And it's giving me 4122. When I am trying to, the higher you go, the better it becomes if you follow the principle. This is a strategy which you don't compromise. Number one, there has to be a contraction between the two Bollinger Band up, the upper Bollinger Band and the lower Bollinger Band. Number two, there has to be breakage of the middle Bollinger Band by the price. Number three, the price has to break the green of Ichimoku on top. Number four, you must be seeing red on your right. You must be seeing red on Ichimoku on your right, then you take a trade. So when you follow this strategy, this one is going to give you 4201. So this is a combination of Ichimoku and Bollinger Band, which will give you opportunity. If these conditions are not met, don't take any trade. Once these conditions are not met, you don't take any trade. So these conditions here are met. So we've taken this trade, and the result after 2 days, on the 22nd, 23rd, on the 24th, this is what we have. We've been able to turn $1,000 to $28,904. This is humongous. Making money in forex trading is not easy, but at the same time, when you have your own strategy and you follow it strictly, you are likely to even make half of this. If your $1,000 is able to give you half of this in a month, this is huge. You won't work for anybody. You will be self-employed. In fact, you can raise your capital to start your business. So let me continue, because we are still on the 24th. We are still on the 24th of March. Now and again, you can see there is a breaking of the middle Bollinger Band. This is the breaking of the middle Bollinger Band. Then the price also break the red of the Bollinger Band, and you are seeing full green on your right of the Bollinger Band. Wow. Then we are going to take this trade from here. When you take this trade from here, when you stop here, it's giving us 2471. 2471. Remember, we now have 28,914. 2471 times 0.25. That gives us $617. $617, we now have $28,914 times 28 times 28. That is $17,297. Let's remove your leverage, the commissions, and the spread times 0.75. It gives us 12,972 plus the total money we have now, which is 28,914. Wow, $1,000 has given us 41,886. This is huge. This is good. Just encourage us by subscribing to our channel. This is Alpha Dominion Forex Traders. What we do here is to teach each and every one of us how to trade Forex. This is an empowerment in trading Forex, how to trade Forex and make money. Not just trading Forex and making money. Following the profit. It is good you know how to follow the profit. Follow the profit and make money in Forex trading. That is what we are teaching here. So we've taken this money on the 27th. Again, there is a short move down. Though we ignore this, we are not interested. But when you look at your right again, there's a full green and there's a concentration of the upper Bollinger Band and the lower Bollinger Band, and there's a breakage of the red by the price. So let's look at this again. It breaks here. There's a concentration here. Number one, the upper and the lower Bollinger Band. Then you are seeing the green. This green is key. The moment you see this green, the moment you see this green, it tells you this is how do I do this now? The moment you are seeing this green here, yeah, from here, this green here, it tells you that this market is buy. So we are taking a trade here from here. When you are taking this trade, remember you are putting a stop loss. A stop loss. So we have 31 days in the month of March. So we'll take this trade. We are gradually winding up. We take this trade from here. Then it gives us 4407. We took this trade from on the 28th of March to the 30th of March. This is humongous. 4407. 4407. Remember, we now have 41,886. 4407 times 0.25. It gives us 1,101. Remember, we have 41,886. 41 now. Every $1,000 we are exposing 0.25 cents. So we are going to times it by 41. You could decide to reduce it by timesing it with half. But the fact remains that it's giving us 41, so we times by 41. This is hypothetical. All I'm teaching here is when you see this repeat itself in the future, take a trade, put your stop loss, make money, give me a comment, subscribe, let me know if what I'm teaching you is key. And that is why I said make a comment. And I'm teaching you how to make money in the Forex market. So we times it by 41. You can see, as it is, this is 45,171. Then we remove all the commission, the spread, and the broker's money. So that is what we have here is 33,878 plus 41,000 886. So we've been able to turn $1,000 to 75,764 in a month. 75,000 from the 1st of March, to 31st of March. This is 31st of March. This is huge. $1,000, turning $1,000 to 75,664, following the concentration of Ichimoku and the Bolega Band. This is serious. March, 31st of March. When we look at this again, 31st of March, 75,764. Let me find out how much is that in Naira times 755 to a dollar. We are talking about, in a month, you've been able to turn $1,000 to 57,222,433 Naira 44 kobo. In a month, you are your own boss. This is what we do in Alpha Dominion Forex trading. Follow the rules strictly and take a trade. This is humongous. Even if you are unable to make, yes, because of the human frailty, because of the fear, because of the butterfly in your stomach, let's even assume that you made half of this, that you turn $1,000, divide by 2 to 26 million in a month. This is huge. When you earn 26,601,216 anywhere in the country today in Nigeria, you must be the chief executive. You must be the managing director of a bank, the managing director of a conglomerate to earn this in a month. So why not just follow the strategy I have displayed here? Forex trading is giving opportunity to each and every one of us. When you have your phone, when you have your internet, in the global financial markets, we have 3 different stock exchanges you can trade. So that you trade the London Stock Exchange, you trade the American Stock Exchange, or you trade the Tokyo Stock Exchange or the Australia, depending on the area you want to trade. These are 3 different types. And we've been able to meticulously turn $1,000 to 59 million in a month. This is huge. 57 million in a month. Assuming you even made half of that with $1,000, it means you can even use this to raise your capital and go into any business you want to do. Yes, forex trading, when you follow this principle, you are going to be the richest person in your family. But what you do for us, subscribe, tell your friends that wasting their time running from one place to another in a seminar to concentrate and look at what we are doing here in Alpha Dominion Forex trading. Look at it cleverly. Look at what I've just done. The Ichimoku might be difficult for you. This is the Ichimoku. You have the parameters. This is the way it is. I didn't change it. The Kasen 9, the Kujisen 26, the Sikospan 52. I didn't touch anything. Then the colors, I blinded the color to none. Tekasen none, Kujisen none, Chikospan none. Then the up kubo, I only use 2. The up kubo, medium, I just put green. Then the down kubo, red. Then I put maximum so that it can give me this color. So when you click, this is what you get. If this is the way it is, let's do a review. by going back to what we've done starting from on the first. Starting from on the first. When I started on the first, I said that once there is a concentration, which is here, I have to change this one to from red to what's it called now, to magenta, so that you can easily see it. I turn it here, then we take a trade. This is how we started. We started with just some few pips. That's about 616 pips. Then we put a stop loss. It is key. You must put a stop loss on every of your trade. You must put a stop loss on every of your trade. Never you take a trade without a stop loss. It is compulsory. These are rules. These are principles that must not be broken. You must put a stop loss on every of your trade. Without a stop loss is without a trade. There should be no trade without a stop loss. I insist. If you must follow this strategy, you must decide certain amount of pips you are going to lose. Without a stop loss, then there is no trade. For every trade, there must be a stop loss. Number one, for every trade, there must be a stop loss. Number two, there must be a concentration of the Bollinger Band up and the Bollinger Band down. Number three, there must be a breakage of the median of the Bollinger Band. Number four, at the up, this price must break the green, which it has done, and you must see the Ichimoku. Ichimoku must give you red, then you take a sell or you take a short. So at the beginning when we started, what was happening was we had here a ranging market. A ranging market is when you see the trade is on a parallel shape. It's not going anywhere. It comes to the same point at the top. It stopped at the top of the Bollinger Band. It came down to the lower Bollinger Band. It stops at the lower Bollinger Band. It comes up here again. Let me even roll it. It starts from here. It starts from here. It ends here. It starts from up. From up. It ends here. It starts from down. Then it goes up. It ends here. It starts from up again. It ends down. It starts from down again. It goes up. These are prices. The market is planning, it's concentrated. It's telling you I'm not going anywhere. But you say, okay, I'm waiting for you until you are ready to break. It comes down again. It stops there. This is a ranging market. It comes up again. It stops there. You can see it's parallel. It's stopping at the same point up. At the upper point of the Bollinger Band, it stops. And at the lower part of the Bollinger Band, it also stops. Then it comes here again, it stops. Then you'll be wondering, this market is not ready to move. So within this period, what do? You wait. Starting from on the 2nd, on the 3rd, on the 4th, on the 5th, on the 6th, on the 7th, you wait. Because the market has not given you the go-ahead. So it's actually the market that will give you go-ahead before you decide on the direction you are going to take. The market determines the direction it's going. You cannot go against the direction of the market. Don't ever go against the direction of the market. The direction of the market here is I'm going down and you are going up. You are bound to lose that money. But you won't lose more because you have a stop loss. So remember, that is the essence of a stop loss. Even when your trade is wrong, you're only losing that 24 to 25 pips. And that is because you refuse to follow what the market is giving to you. Once you see red, like we saw red here, and it's breaking the middle, and it's passing through the green. At this point of the ranging market, which I've just drawn, before we're able to take a trade from here, from the median to this point, this is what we saw. There was a concentration here, it's still ranging. The price decided to break the median, close below it. It decided to break the middle Bollinger Band. This is the middle Bollinger Band. It breaks it. It breaks the middle Bollinger Band. That's number 2. Then again, the price breaks this green. Number 3. Then number 4. There is this red, Ichimoku red. This is the Dankumo. This Dankumo is also here. So when you see this, we're able to take a trade here. While we are taking this trade, we are putting our stop loss. While we are taking this trade, we are putting a stop loss here. While we are taking this trade, we are putting a stop loss here. Okay? No, this stop loss is too small. Okay, 24 is okay. So I put 24, 25. I'm preparing to lose 25 to gain $163 or pips rather, pips. So this is how we started. We started from on the 1st by trading $111. Then we follow these rules strictly by looking at number 1, the Bollinger Band up and the lower one at the top. They concentrate, they form a parallel, they break the middle of the Bollinger Band, it breaks the middle of the Ichimoku, and you are seeing red, you sell. Then there was no market on the 8th, on the 9th. Between 8th and 9th, we waited. Here, while we were waiting, we saw there is an opportunity. We saw green. Ichimoku gave us green. That means the market will be bullish. Then the price breaks the middle. Number 2, there's a concentration of the upper Bollinger Band and the lower Bollinger Band concentrating down. Then it breaks the middle. And when it breaks the middle, which is the median, I call it the median or the middle, then also breaks the middle of the red. Then you are seeing green. Once all this formation starts, then you are good to go. So we pick a price. We pick a trade from here. Then we take this. It's giving us 2119. And remember, we're taking 0.25 on every $1,000 that we made. And that is how we're able to come here, hypothetically making this. So this is what we did. These are all the trades we took on these days. And I want you to go over it. I want you to look at this over and over again. I want you to read this over and over again. I want you to look at this over again. Look at where we take this trade. Then you can now compare it to what is available in other settings. So on the, you could see on the 31st of March, this is what we had. We also had red here. Even on the 31st of March, on the 1st of April, on the 1st of April to the 3rd of April. Okay, 3rd of April. This is weekend. So the moment you are seeing red here, the market closed 10:45 or thereabout, middle of the night, you know, then we are now in April. Okay, right? Oh, yeah. We are now in April. Good. So this is April. April start from here. April start from here. That is 2nd of April. Yeah, 2nd of April. So when we look at this, the price is breaking the green. Number 1. No, it's breaking the red. Sorry, it's breaking the red. So I'm just looking at others now. It's breaking here, the median is breaking the red, and we are seeing green. Then we can pick this trade. Once this is done, again, what do we have here? We put a stop loss. We must, at every point in time, put a stop loss. No, this stop loss is too much. A stop loss of 31 is a stop loss from 20 to 29 or 30. That is applicable. Okay, this is 25. So we take this one, and this one gives us 24,599. So I start trading again on the 3rd of April. On the 3rd of April, I have been able to raise a capital of $75,000, 764. So I just want you to imagine turning $1,000 to $75,000 in a month. Now, the following month, I'm still following the strategy, taking my trade with the capital I have raised of $75,000, 764 in the following month of March. Be that as it may, if I take a trade from here with a stop loss, I am making 2404. This is the month of March now. The month of April, the month of March has ended. We are now in the month of April. So I'm now taking this 2438, 2438, 2438, 2438 times 0.25. That gives me 609. So I'm going to times it by 75. This is hypothetical and it's real. That is 45,712. Then I remove all the commission, the leverage, and the spread. So you can see now the first month of April, I am making $34,284. This is serious. $34,284 plus my 75,000, 75,764. So right now, I've been able to turn my $1,000 to $110,000, 0.48 and 48 cents and $48 rather. Dollars. So assuming I'm going to take another trade following the same principle, I come here, this is the median, you break this median, then I'm seeing red, I'm taking my trade from here to this point, and I put my stop loss here. Let me check my stop loss, 27 pips. That's okay. That is what I'm preparing to lose to get here. So I take this trade again. I'm taking the second trade now. The second trade in the month of April, 2635. 2635. 2635 times 0.25. That is 658. I now have 110 times 110, 110. It gives me $72,000. I remove all my commissions, the spread, and what have you. So what I have here is 54,346. 54,346 plus 110,4 110,048. So what I have gotten here, I have turned $1,000 to 164,394. This is huge. This is Alpha Dominion Forex traders. We are here to empower Nigerians. We are here to empower our followers. We are here to empower you that you can make money, you can create money on your own by looking at all the steps we've given to you. Look at these steps from 1st of March to the end of March and how you can turn $500 to a certain amount of money, how you can turn $1,000 to a certain amount of money using this strategy. This strategy is key. This is what we use and this is what we teach. So what you do for me, subscribe. Not only subscribe, tell your friends. Not only tell your friends, go ahead and leave a comment. Like and leave a comment. Thank you.